Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, November 22nd, 2024. S&P 500 currently sitting at 5960. I'm David Zarling. I'm here with a discretionary user of subtitles, Ian McMillan. Any good shows that you're watching lately?
We started The Perfect Couple.
Okay.
Although it's a drama. So I have a reputation in our house for dozing off.
Okay.
Once I am in the bed at night.
Okay.
So I can make it like 45 minutes and then my eyes start getting pretty heavy. So yeah, we're trying to make it through the pop. It's got like Nicole Kidman in it.
Oh, really? She's still
and
around.
It's like I said, it's like a drama. It's a murder mystery. Someone gets killed at like a wedding and they're trying to figure out who did it.
Mysteries. Subtitles or no?
Well, the kids are not in the room.
So no subtitles.
When we watch it, so no subtitles.
Yeah, I'm not a big subtitle guy myself, except for if you're watching something with a heavy dialect or a foreign movie or something like that. My kids like to use them all the time.
That's their generation.
It is. I give them a hard time. Like, just focus. But let's focus on some price things here, Ian.
Haven't given up yet.
Hey, did you know that we're a couple weeks removed from the election and the world hasn't ended?
It was not ended. Some things have done better than others. I mean, if you're European, you might. Their stocks haven't gone anywhere. But that's nothing new, right?
Right. It was already in a downtrend. International stocks, Europe.
Terrible. Golly, terrible. New relative. I mean, you're seeing it all foreign stocks, new relative lows. Well, minus our friends down in Argentina.
Yep.
That's the only place you can go outside the U.S.
We can make some political commentary there, but we don't need to do that. But your point is made. I'm sure most of our listeners are familiar with U.S. equity performance since the election. And for comparison's sake, the S&P since the election is up about 4%. VEU, which is all world stocks minus U.S. stocks, is down almost 3.5%.
Wow. So people say 4% in 3 weeks. It's not, that is a big move. And if you annualize that, that's a big move.
Sure. But don't do that. Don't annualize it. Don't count your golf strokes until they happen. There's a lot of people, I'm shooting par, I'm shooting 2 under. If I just
2 under at the turn, you bet your butt.
Yeah.
That means I'm shooting 4 under.
Right. Well, and that's the crazy part. And I'm convinced that all golf courses are set up that holes 1 through 3 get you all comfortable, and then they pull the rug. They've got that fun par 3 waiting for you, or a par 5 that's gonna humble you.
Okay, so then what's the par 3 in the market right now?
I love that.
What's the most obvious uptrend to be involved in?
The most obvious one, well, if you look at since the election, if I can use that, because we've talked about on this podcast before that it's not about who the president is, it's just where the dust settles after the election. And when you look at performance since then, here are the things that are up since the election. Not international stocks, but Bitcoin, up 42% since the election.
2%.
And then when you look at, and that's not even talking about MicroStrategy, but then you look at sectors, and here are the sectors that have outperformed the S&P since the election: financials, energy, discretionary, utilities, and industrials.
So not tech.
Not tech. Not staples, not real estate, not materials, not healthcare. In fact, healthcare is negative, also down 2.5%. And healthcare its absolute uptrend, I guess, is fine. But on an absolute basis, talk about an opportunity cost. Something's going on. And we had a really good conversation before we hopped on here about price before news, and that price, the way we use technical analysis is rather than having a narrative and trying to get price to match that, it's the other way around. And there's things going on in healthcare that make you wonder. I mean,
I agree. By far the worst sector out there.
yeah. And it continues to underperform. It's been and again, back to your original point, that's not new news. I mean, international's been in a relative downtrend for over a decade. And then you look at healthcare and something as simple as looking at XLV versus S&P. I mean, that's been in a downtrend since the beginning of 2023. So we're going on almost 2 years of a downtrend in healthcare stocks versus S&P remains in it. So that's not new information since the election. But as far as you mentioned, what's that par three, the rug pull? I view it as what's the red flag in the market. And I think you can make an argument about what you highlighted there with tech. If we're seeing the big boys, and I'll use Apple as an example, and you look at Apple versus the S&P, it really hasn't, it's gone sideways since July of 2022 with two pretty big relative drawdowns during that period. So Apple hasn't really done anything. When's the last time you heard someone talk about Apple? It's really been the NVIDIA story.
I haven't talked to Apple.
Microsoft.
Golly, Microsoft has really fallen off, especially from a relative viewpoint. Yeah, the two big ones. But I do, right? And we've talked about this before. Rotation out of tech. And you mentioned, like, we've got blips of it over the past couple of years. Has it really come to fruition? I mean, it does for like a quarter. Then we get off the small and mid cap train. It seems like we're going for that again.
Yeah.
This one feels like it's got a little bit more substance to it underneath the surface.
Okay. Walk us through that when you say that.
I mean, right, so it's very if we're going to have, let's be honest, trillions of dollars to migrate its way from mega cap tech into small and mid cap everything, that is going to take a lot of time. That's a delicate process without tipping over the boat, because we know how weighted towards mega cap tech some of these
yeah, that's a good point.
So yeah, if you own billions and billions of dollars in mega cap tech, your Apples and Microsofts and Amazons, I mean, Netflix, doesn't look like anyone's trying to get out of Netflix, to be honest. I know that's probably technically discretionary and not mega cap tech, but I'm throwing it in the mega cap pool.
Well, it's part of the FANGs family.
Yeah, the FANG. That's probably a better way to put it. Magnificent Seven. So yeah, how do we get out of that? And I do feel like they've done a good job so far. That doesn't say, I mean, of course, in a few weeks, we could have an oops moment, and it's just too much selling of the big stuff for too much supply in the mega caps.
Right.
That the demand and everything else can't overcome. But so far, they're turning the aircraft carrier. No one has fallen overboard. There are some wonky days out there, and still a lot of back and forth. I would still say one day tech outperforms, and then the next day everything else outperforms, obviously to varying degrees. But I don't know, this time just feels like 2025 could be the year for quote unquote everything else.
Yeah.
And that's a relative, though. Maybe now that is relatively speaking. So now you got to figure out which direction is that outperformance. Trend is up, so I would assume it continues to the upside. We had tech underperform, and we went down.
Mm-hmm.
So that possibility is always floating out there.
No, it's a good point. I mean, and the fact that you have these sectors that I mentioned before, how bad are things if financials, energy, discretionary, industrials are doing this well? That's typically not what
you got. Retail breaking out to new highs. You have a lot of good stuff going on out there.
Well, and we've highlighted several times. You look at transportation stocks that finally cleared the week of the election to the upside above $70 on using something like IYT, a proxy for transportation stocks, and that continues to hold.
Yeah.
So Dow theory, comparing industrials versus transportations, we have confirmation at this point, and that can always change. But I think you bring up an excellent point that rotation out of tech, as long as that rotation is going into things that are risk on in nature, such as financials, industrials, discretionary, that's not such a bad thing.
I agree with that.
So speaking of Bitcoin, we highlighted a couple of weeks ago a chart by Larry Thompson just highlighting that regardless of the president, each of the last 3 elections now, you've seen big moves out of Bitcoin. And here we are.
Seems like.
Here we are again, post-election with Bitcoin moving higher. And that's not a bad thing. That's also risk on. And I guess related to that, what do we have going on with the dollar?
Dollar breaking out of a 2-year range between 100. This is dollar index.
Okay.
100, 107. So very strong. And we've had a strong dollar since early October. Got hit a little bit after, maybe a couple days. This is a very strong move the last 7 weeks. Stocks have held up fine.
Well, and part of that story, though, is also just how weak international currencies are.
Yes, they are.
You brought up a good point as we were prepping for the show that when you look at gold, the reason why it's not a bigger story is we're so U.S. centric. And so when you price gold in dollars, still in an uptrend, still a nice looking price move. But when you compare it versus other currencies, it's even more dramatic. To own gold in the yen, to own gold in the euro or the British pound.
Yeah, so people say, well, why is gold going up? The dollar's going up. Why would gold priced in US dollars be going up? Which is a fair assumption. And I think it's just like, and JC touched on this, I can't remember what, it's been within the last 3 years, but we've had another period like this. And gold around the world, a lot stronger. Gold and other currencies, price in other currencies, very strong.
Mm-hmm. It just goes to show that the whole buy and hold method of you should buy and hold everything is again proven wrong, because we have ratio and strength analysis we can do. Just so many things internationally outside of Argentina and a few other spot places. Their currencies are weak. Their markets are weak. And I understand I'm also talking about markets priced in dollars, and that's part of it. And maybe we see if the trade-weighted dollar using DXY clears back below 107, maybe we do see a resurgence. Maybe this is some type of international flush where we're going to exhaust the sellers, because it's a pretty dramatic. You look at the S&P, or you look at VEU versus the S&P the last 2 months. There's a spread there of 10%.
That's golly, terrible. Now the argument is you shouldn't have any exposure there in the first place.
If you're a technician, but buy and hold people. Yeah, buy and hold. We see portfolios come in all the time with prospective clients that are holding on to dear life for international stocks or treasuries.
Kevin said he had one a few weeks back. I think 35 different mutual funds. Jeez, you ain't outperforming anything with 35 different funds, tell you that.
Exactly. I think it's a good segue for me to highlight the supporter of this podcast, the Adaptive Select ETF, which is listed on the NYSE under ticker ADPV, which helps investors access 2 of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more including how to invest in ADPV by visiting adpvetf.com or calling 1-833-880-5200. As always, investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. So speaking of momentum, Ian, what are we seeing out of momentum? We talk about portfolio makeup, and a lot of buy and hold shops will hold international no matter what. They'll hold some treasuries no matter what. Not a great idea. But there's also different ways to slice the loaf of bread. We talk about large cap, mid cap, small cap. That's one way. You could slice it into sectors that we've talked about. You could slice it into style box, whether it's small value or large growth. But there's also dividing it into factors, such as value investing.
Yeah.
What are we seeing out of momentum?
Momentum's had a good year, which is nice after 2023. Not a great year for playing under the surface, I guess. Yeah, a lot better year. Most momentum funds have outperformed the S&P, and that's a lot of, that's not a lot of. Yeah, S&P, the mega cap stuff has done well.
Well, and for comparison's sake, to highlight what you're saying, using SPY, which is up 25%, almost 26% year to date, you have something like SPMO, which is momentum, S&P 500 momentum, which is up almost 47.
Yeah, and it's had NVIDIA, Amazon, Meta. Those are the top three holdings. Those are obviously Fang-ish, Magnificent Seven-ish. Lilly, right? We talk about, golly, it might be the only thing in healthcare outside of some of the medical devices names that have done well. Like I think, what is it? Boston Scientific has done pretty well. Costco, Walmart. Those are all strong uptrends. Now, getting outside of the S&P for momentum this year has been a little bit better. Like your small cap, mid cap have done better on a momentum. But 42 versus, what'd you say? SPMI was up 42, S&P is up 26.
Yeah, 47,
that's amazing.
26.
That's great. That's hard. 1,600 basis points it's hard to beat.
Yeah.
It's good outperformance.
So factor, the momentum factor, and we know that momentum exists. It's a real factor. It's not some theory. And when you combine that with the concept of uptrends, it makes sense. Uptrends are a reflection of momentum. And there will be a day where this uptrend is over. I don't know when it is. I wish I did. But as far as age of uptrends, others would call it a bull market. We're not that old.
No.
So
that depends on when you want to. That goes back to the argument of when are we saying the bull market started? October 2022 or January 2024?
Right.
Are you taking it from the lows? Yeah. You can, I guess there's an argument for that. You take it when we get to new highs. Because you can't, in theory, be in a bull market if you're not even above somewhere it used to be. Like, are you in a new uptrend if you're not at all-time highs? Then again, maybe that's a little harsh, right? If Japan, when did the Nikkei eclipse its 1989 highs? Was that this year?
Yeah, it was.
So it's hard to say, well, the Nikkei's been in a bear market for 35 years. Maybe it's not hard to say that. Maybe you can say, I'd be willing to listen to either argument.
Well, and you bring up a really interesting scenario with the Nikkei 225. In March of this year, it had eclipsed its prior high back in 1989. But when we look at it now, it's paused there.
Just sitting, just consolidated for, it's not a bad consolidation though.
No, it's
if you
not.
Look at a monthly chart, that's not bad.
No, and it's a testimony to the behavior of investors. And some would say, well, are you telling me that the market has memory going back to 1989? And my answer is yes. You look at enough price charts, you look at enough herd behavior on buying and selling, which we do every week. We look at thousands upon thousands of charts It's part of our process. This is not surprising to see the Nikkei pause here.
No.
And related to that, you look at technology versus the S&P, same scenario. Not all the way back to 1989, but back to the 2000 top. It's stopped, it's paused, it's moved lower since meeting that 2000 relationship top. So you have two major instruments, the Nikkei stock market or the Japanese stock market, and tech stocks versus S&P, both pausing.
Right, and I think that's a fair behavior, right? That's the market saying, are you willing to own more tech stocks than you did in 2000?
Yeah.
Like when we were at peak hysteria about the internet and what was to come, you want to own tech more than Americans did then, and the market's saying, yeah, maybe I don't. It doesn't mean that we're getting another .com bubble. If anything, I think we spent the first few minutes of the podcast laying out we might be able to get through this without having to tear it all down and having a 80% drawdown in the NASDAQ.
Well, I do think, too, when you look at the concept of studying price, and that drives the narrative, right? Rain causes wet streets. It's not the other way around. Most investors consume financial media, so they consume the narrative and try to marry it to price. So that methodology is saying wet streets cause rain, and we know that's not true. And when you look at the concept of what are we seeing out of price, what could be the story there, not that we're trying to create stories, because really we're not. You look at cash cows, companies within or COWG, and the strength that we're seeing on a relative basis of companies that hold a tremendous amount of cash on their balance sheet. It makes a lot of sense considering what the dollar's been doing. Highlighted the strong move we've seen for, I think, over 2 months now out of a trade-weighted dollar. It would make sense that companies that are sitting on piles of cash would get bid up. And so here you have two instruments, COWG. You look at them on a relative basis, and they've performed really well. And we'll see where they end up. But it's about using price first and foremost. And I think an intriguing thing to me recently is strength out of agriculture. We haven't talked commodities around here for a while, but
you think it's time?
I don't know about that. I think it's got a similar vibe as international, where there's plenty of things that are not great in the commodity space. But when you look at something like a PDBA, which is a K1 free. So PDBA representing agriculture commodities without issuing a K1. It's starting to show signs of a bottom on a relative basis. It's making new highs on an absolute basis. It's something to pay attention to because you're always looking for differentiation. You're always looking for, okay, is there rotation? It's similar to the Bitcoin scenario where you start to see it set up. It takes like a year to happen, but you have to be ready to pounce. And I know our clients are happy that we were able to accomplish that. That's not a recommendation on this podcast, especially after the move we had. And so can Bitcoin go higher here? Is that or too far, too fast?
I don't know. Where are we at right now? 98,000?
It's got to get to 100 so everybody can talk about it around the turkey table.
I think fib, we're out of this range. We've been in this range since March. Broke out of it really election night. And I remember watching it at about 7 p.m. Eastern. That thing started working its way higher. And I don't sit there. I don't want to give the impression that I sit there and look at charts every evening. But just fascinating to watch that chart plus election results in real time.
Yeah. I mean, it was moving along with the predicted markets.
Yep.
And here we sit.
And that was to get over, right? That was the big wall, was 73,000. We had tested that, the 72 to 73,000 area a lot of times since March. And we now sit at 98,000. The first FIM extension from that range was about 86,000. We're through that. So next stop is 106-ish, 107. We'll see.
Yeah, we will. And that's the beauty of saying we don't know, which most investors or people you talk to who don't use technical analysis to study of supply and demand. They like to pretend that they know, or they've convinced themselves that they know, and that's a really dangerous spot to be. Is this, I know what's going on exactly, which can't possibly be true because there's millions of investors, many institutions that are managing billions upon trillions of dollars. And so you could have an opinion, but in the end, it's going to be the opinions of the monies being put to work. And right now we have an environment with some very risk-on areas with financials, discretionary, industrials.
Yeah, how about financials? So they have turned into probably the best sector.
Yeah.
And they've been there. I mean, they weren't having a bad year overall, a wonky summer on a relative basis, to be honest. But
Well,
I mean,
they're the
financials,
they're the best sector year to date. They're the best sector since the election. Hard to argue with that.
yeah. I mean, best move we've seen out of them since 2021.
Right. What
Still
else?
working through that regional bank
Yeah. Regional banks still have some work to do.
mess on that relative chart. Just got walloped in that whole debacle. But they're trying. It's a valiant effort. I'll give them that. And we mentioned ADPV earlier. I just had a large weighting towards financials.
Yeah, good point.
And that's, I mean, I don't think I'm saying anything. That's public information. So
Yep. Yeah, you can look on the ADPVETF.com
it's
website.
a very large weighting towards financials for a few months now, and that has paid off.
And that's another testimony to momentum.
Yes.
And the way I view momentum, and I would tell you, you could slap me in the face if you think I'm wrong on this, but I know we're recording this remotely, so you can't actually physically do it. But just go where momentum is. If value has momentum, go there. If growth has momentum, go there. If mid-cap has momentum, go there. It's really about identifying where is the momentum, which I know ADPV is trying to do. That strategy is trying to grab momentum wherever it's located. And it's just interesting to note that it was over the summertime that it was pivoting from more software tech to financials. It's an interesting thing to observe and publicly available. You can look at the holdings on the site. You can download it into a spreadsheet if you want, and you can look at what its holdings are. ETFs are a beautiful thing.
They're great.
Yep. Anything else, Ian, you want to highlight for our listeners?
I do not have anything. I don't think our mantra has changed much since Q4 2023. Hasn't changed, didn't change going into the election. Trend has continued since the election. In fact, I think we got more toys to play with since the election, which is awesome. And yeah,
it continues.
I don't have to be much to complain about.
Yeah, no. In fact, we have much to be thankful for. We'll take next week off from recording a podcast. It's Thanksgiving next week. So many things to be thankful for. You brought up the access to the tools that we have in the market. Just incredible. We can be thankful for our families, all the blessings around us. And I know for a sinner like me, super thankful for Jesus. But Ian, I hope you have a wonderful week with family, extended family next week, and a wonderful vacation. I wish the same for our listeners. Check out our prior podcast episodes if you're bored while working on chores or relaxing after turkey, whatever it is you're doing over the Thanksgiving holiday. Make sure to hug those around you. But we really appreciate it. If you like this podcast, please share it with others. Give us a thumbs up or a high ranking, whatever your podcast platform is of choice. That's a way that you can reward us for providing this content for free. And so, Ian, I'm thankful for you, and I appreciate you doing this podcast with me.
No, I really appreciate it. I know that the Zarling family has an extra special, important Thanksgiving coming up.
We do.
In a few days. So
yeah, I appreciate that, Ian. It's going to be awesome. Thanks again, my friend. And thanks for everybody for listening.
Have a great weekend, everyone.